Dan, how are you, man? Good to see you again.
Great. Thanks for having me on.
Quick quiz, one question. Do you remember the price of Bitcoin last time we spoke?
Oh, that's a good question. I don't, because I get a little fuzzy on it, but it was probably 32,000.
No way, man. It's way less. We spoke on November the 11th the last time.
Oh,
it was
yeah. I love that.
$16,000.
That is great.
Yeah. And since then, we've gone up to 64,000. We've dipped under 50 today. It's been a pretty wild ride, man. How are you taking it all in?
Oh, it's good. Yeah. It adds for excitement, but, we're on a 20-year journey here, and Bitcoin does go up on average 213% a year, and sometimes it goes up a lot, and sometimes it goes down 20%. But it's just part of the process. It's a young technology. It's going to be somewhat volatile.
Yeah. Well, listen, I was reading your update recently. I get your excellent updates from Pantera Capital, and you set a summer price target of $115,000 for Bitcoin. So I want to ask a few questions about that first. Is that price target still on, do you think?
Oh, it is. It is. And that was set, actually not recently, that was set a year ago in our April 2020 letter based on the halvings. And we're right on track, and we've actually been on track almost every month since we published that. So I still feel rock solid on that.
Right. So I want to ask a couple of specific questions, because you said the summer. So we saying anything, from June to August? Yeah,
we originally forecast August 1st, if we want to get really specific. I'm just saying, well, it's still kind of sunny and warm in the Northern Hemisphere. If it hits 115, I'm going to be pretty psyched about that.
So how did you build this target? How do you guys come up with this?
Yeah, so I think this is really important. The halving, as all your viewers know, every 4 years they cut the number of Bitcoin that are issued in half. And obviously, if you cut the supply of something, it goes up. And we've seen that in the commodities market. I used to be at Tiger Management, where we traded all kinds of really interesting commodities, and we'd always study, the production rate of mines, and if mines were being shut in, or there was some kind of labor disturbance and mines couldn't operate. If you cut the supply in mining, the price of the metal goes up, and that seems logical, and it actually happens in Bitcoin. We've had two halvings prior to this one, 2012 and 2016. So the first halving was actually massive, because Bitcoin had only been around for 4 years. There were very few Bitcoins outstanding. And in our study of halvings, the trough before the halving is about 415 days, something like that. Before the halving, and then the peak is about the same distance after the halving. So the whole thing is about a 2.5 year period. And in those previous halvings, the first one, there was a cut of 15% of the outstanding stock of Bitcoins reduction for the next 400-day period. So it was actually, a very large reduction in supply relative to the amount that was outstanding or in float. And it had a massive impact on the price. The second halving in 2016, obviously, was half as big in terms of the number of Bitcoins that were cut out, but there was also quite a bit more Bitcoins in circulation. So the reduction in supply for that going forward 400-day period was about 5% of the outstanding. So it was about 1/3 as big of an impact on the supply. And potentially not coincidentally, the impact on the price was exactly 1/3 as big. The price went up a lot, but a third as much as the first time. So when we analyzed it in August or April last year, this halving obviously half as big a reduction in the number of Bitcoin, and then there's even more Bitcoins outstanding. So it's taking out about 2% of the original or existing stock of Bitcoins out of the supply. So we used all those ratios, in very precise detail to then forecast the impact it would have on price this time. And we forecast the price would go up a little over 10x, which I know in the normal market sounds totally ludicrous, but Bitcoin goes up 10x every 2 years anyway. So doing it through this halving didn't seem hard to do. So when Bitcoin was about 8,000, we published a table, which is a forecast of each month the price of Bitcoin. And for a while, Bitcoin was a little behind the curve. For a while, it's a little ahead of the curve. And then last week, we had forecast that Bitcoin would hit $62,968, and it hit it that week right on time, which is pretty well. Obviously, we've had a setback, but I still think it's highly likely that we hit something like 115,000 this summer.
Yeah, I've got your table here, and you kind of you measure the weeks ahead, and I've got it here. Where is it? By the 15th of April, you had it down at 63,000. And then the 15th of May, you've got it at 74. So maybe we're just having that dip before we run up to 74.
Yeah, and as I mentioned, there's times in the last 8 months that it was a little ahead of pace. There's some times it's a little behind pace, and so it's not like a Swiss watch that you can't expect to hit each date on time like it did last week. But I just think it's way more than a 50% chance Bitcoin's to be a lot higher in the end of the summer.
Yeah. Do you just accept these dips like a lot of the hardened hodlers? You just seeing them, whatever, it is what it is, or are you trying to read into the data? Because there's lots of things happening. For example, I just saw the announcement of potential Biden capital gains tax increases. Do you look at things like that? Do you think that's affecting it, or do you just think it's Bitcoin doing its thing?
We do. We have 3 different kinds of hedge funds. One is a Bitcoin fund, so it's just a passive tracker, and that one obviously we don't do anything other than trying to execute efficiently when new investors come in or people want to go out. But our other 2 hedge funds do have discretion, so we're trading early stage tokens, and then we have a fund that invests in liquid tokens. And in those, we are trying to maximize return over time. And so we do try and catch these downdrafts. This one we didn't catch. The one in February we actually got perfectly right. It peaked, maybe around February 20th or so. We took about 20% of our risk off. The markets came down 27%, and we put our risk fully back on. And so we're trying to add value that way. And we've seen it in the returns. Our Bitcoin's up about 100% year to date, and our liquid token funds up 320% year to date, and our early stage funds up 360. So we're trying to add alpha through active management. But the punchline is, we think 10 years from now, Bitcoin's going to be orders of magnitude higher. So we're not trying to be too cute.
Right. Okay. So with your Bitcoin fund, you don't actually actively trade that at all. So even, I'm looking, it's sometimes these Bitcoin cycles become a self-fulfilling prophecy. And, I'm talking to people, they're saying, well, when are you going to sell some? What price are you going to sell? Is it going to be the end of the bull market in December or January like last time? Are you going to sell then? And Dan, sometimes I can think, perhaps I could take a little bit off the table then, but I would hate to get something wrong and then 4 years' time have less Bitcoin than I had. I don't mind so much not having more, but I'd hate to have less.
Yeah, I think that's the thing most people have learned, is that for something that triples every year on average for 10 years in a row, it's hard to be flat or, God forbid, short, for very long periods of time. And, we do reduce risk, for weeks at a time. I remember last March when the impacts of the virus were just, becoming apparent. We took risk down. We thought it was prudent, but within a few weeks, we had decided that the monetary stimulus that was going to come out of the reaction to the virus would be massive and would be unambiguously positive for cryptocurrency. So we went back to, 100% long. So, we do only take risk down for periods of weeks rather than months or years.
Well, listen, Dan, one of my favorite quotes of yours, pretty sure it's yours, was Bitcoin was born in a financial crisis and its coming of age is this one. I probably haven't got that word for word correct.
No, that's it. And I believe that very strongly.
How are you assessing the crisis we're in at the moment? Because it's very different from 2008. 2008, it felt like gradually and then suddenly the economy started to collapse around us. Banks were collapsing, and the crisis just kind of happened. It felt like, to someone like me, it just kind of happened overnight. I wasn't prepared for it in any way. Suddenly, this massive event happened. But this feels slightly different. And I don't know if it's because I'm involved in Bitcoin and everybody else is sleepwalking, but I feel like if there is a crisis, we're already in the crisis. We're seeing it unwind in front of us. How do you feel about it?
It is important to remember that Satoshi created Bitcoin in response to the 2008 financial crisis. And the Genesis block quotes the Times of London's headline about a bank bailout that was really pissing Satoshi off. And it's incredibly quaint to think about how small that bailout was. It was 50 billion pounds. The United States prints that amount of money every 4 days now. And to some extent, that's the reason, the economic impact of this virus is not as large as the economic impact of 2008, 2009. That took about 3 years for GDP to recover its pre-crisis level. Obviously, it's really hard on, workers all around the world. This one, frankly, it's just all the cracks are being papered over with paper money. And the amount of money is staggering. In June, the United States started printing more money each month than it did in the first 200 years of our country's existence. That papers over a lot of cracks. So, that I would say that's why this one doesn't feel as economically severe. Obviously, it's, there's a lot of psychological trauma from the virus, but the U.S. will probably attain its prior GDP level much quicker than it did in 2008, 2009. And part of it is, you're saying banks were failing, companies were failing. Companies aren't allowed to fail anymore. Even, airlines and all these types of industries, which could have or would have failed, are being bailed out by the government. And, if Satoshi were active today, you could imagine he or she would be even more pissed off about airline bailouts than he was about bank bailouts.
Yeah, it's a tricky one on the airlines, because I wonder at the start of the crisis whether they felt like it would be a shorter crisis than they imagined, and these furlough schemes were something they would be having to run for maybe a handful of months, and here we are a year later, and we're still in the midst of it. And I sometimes wonder if they feel like, well, we've gone this far, we might as well carry on. Feels a little bit tricky to have printed all this money and then to turn around and a year later and say, okay, fail. Although I think some of them will fail anyway. I mean, I look at something like British Airways. I have no idea how they are surviving as an airline right now.
Yeah, it's sweet capitalism works. Shareholders take a lot of risk and get a lot of upside, and occasionally, have their investments recapitalized, basically.
Well, why do you think they're not letting them fail, though?
Oh, it's just arbitrary, and I picked that at random. Tons and tons of small businesses are being allowed to fail, and all these mom and pop shops and mom and pop restaurants. So it's totally arbitrary which industries the government chooses to favor and which ones they let fail.
But do you think that's to protect the stock market?
Oh, yeah, and it's done a great job, right? If you would have told me a year ago that we're going to have a global depression and the corporate earnings were going to be down 17% and the S&P would hit a new high, I'd say, that seems very unlikely. And the only way it could possibly happen is if you printed, literally trillions of dollars of new pieces of paper money as the only reason stocks are up. And one point to make is, it's not really that stocks are up and gold's up and Bitcoin's up and S&P 500 and soybeans and corn. They're not all up. I mean, the better perspective is paper money is down. Everything else is kind of holding steady.
Right. So are you accounting for that when you're running your numbers internally at Pantera?
Well, yeah, it's a huge part of the impetus for this rally here. Obviously, we've been advocating for cryptocurrency for 8 years. So, we've been very bullish on the technology and how it's going to disrupt a bunch of legacy businesses. But the pandemic really is the thing that kicked it into a whole new gear.
Yeah, it's a really tricky one, because I feel like a lot of people don't really truly understand inflation. I feel like it's misunderstood by a lot of people. I feel like, certainly amongst my groups of friends, they feel like inflation is one of those things they've always heard about as a natural part of a growing economy. They don't see it as anything sinister. Do you feel like there is that confusion around inflation?
Oh, there is, for a couple of reasons. One is there's inflation in different types, and not all inflation is the same. So the governments often measure a basket of consumer goods, like in the US, they have the CPI. Mm-hmm. That is all stuff that's quantitatively easable. So flat screen TVs or flip-flops or all the things in the CPI basket, you can make an infinite quantity of them. And there's a lot of slack in the global economy. So I don't think you're going to see inflation in consumer goods like that, but you're seeing massive inflation in hard assets. So real estate or gold or Bitcoin, anything that's not quantitatively easable is having massive inflation. And so, to your friends, it depends on what they're looking at. If they're trying to buy a new flat in London, they probably see a ton of inflation. If they're trying to buy some flip-flops, they don't. So inflation is essentially in the eye of the beholder. And in the 70s, Milton Friedman was famous for saying inflation is always and everywhere a monetary phenomenon. And I love that line today, because that's really what's happening, is enormous amounts of monetary stimulus is being created, and it's creating inflation in hard assets.
I've got that quote straight in front of me here in my notes. Inflation is always and everywhere a monetary phenomenon, in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in output. Yeah. But it must mean that the government is incentivized to have a kind of bullshit calculation of inflation to protect their money printing. Is it that sinister?
Well, I don't think I wouldn't say it's bullshit. They're trying to measure the cost that a consumer encounters in buying the things, that they consume each day, but they're not explicitly trying to hold down the price of other things like stocks or real estate. And throughout history, you've seen governments have been very eager to protect homeowners and stockholders. Those are two minority groups. Well, homeowners is a majority group, but stockholders is a minority group. Those are groups that the government's always very eager to protect. And there used to be a term, the Greenspan put, that anytime either of those two groups got a boo-boo, the Fed would cut interest rates. And, that is very true. People on a fixed income or renting, are not being served by those policies. But there is a very clear desire to have the stock market go up, have the real estate markets go up. And you see that reflected, in the quantity of money that's being printed right now.
It's a bit tricky because it makes, for certain groups of people getting on the housing ladder, a lot more difficult if the price of houses is accelerating away from people. So it just feels like that basket of assets, it may be something that you can calculate that's useful for the standard family's weekly outgoings, but it doesn't feel like a true reflection upon what is really happening.
Oh, I agree. 35% of Americans rent. So they are not being advantaged by all this money that's being printed that's driving up the price of real estate.
So where's it all end, Dan?
Well,
a lot of people are bringing out copies of the When Money Dies book about the Weimar Republic, what happened there. And I've read the book, and I try to imagine, I think, well, that can't happen now in the United States or in Europe or in the UK.
So on that point, it happens more slowly, right? So all those great photos of the Weimar Republic with the kid in a wheelbarrow and money going to buy a loaf of bread, right? But it does happen, and it happens kind of imperceptibly. Your own currency is the oldest currency on earth, but it is connected to a pound of sterling silver for a reason. It used to be exchangeable for a pound of sterling silver. They have now printed so many pieces of paper pounds that it takes 184 pieces of paper pounds to buy a pound of sterling silver these days. So although the average person in the United Kingdom doesn't notice their currency being debased, it is being debased. And obviously it's not happening at the same rate as, countries like Venezuela or Zimbabwe, but it is definitely happening. And the US, one of my favorite examples is quarters and dimes were silver when I was a kid, right? They are not silver now. I mean, it's just unthinkable that they could be made out of silver. And pennies were made out of copper, and it now is more valuable to melt the pennies and get access these so-called intrinsic value of money that people are always saying Bitcoin does not have. But it's actually now a felony to melt money in the United States and punishable by 5 years in prison. So there really isn't, there is intrinsic value in metal money in the United States, but it's illegal to access it.
Is it in Canada they got rid of the pennies?
Oh, I don't know.
Yeah, there was one place they got rid of the pennies. Somebody told me because it cost more than a penny to make a penny. So, yeah. And they were round. I'm trying to remember. I'm pretty sure maybe it was Canada.
Well, it's funny. Nickels the 5-cent coin in the United States are obviously used to be made out of nickel, but they're no longer made out of nickel because the nickel's worth more than 5 cents.
Yeah, how do you think this plays out? Is this just going to be a short deflationary event whereby the government's going to print enough money to clear their debt obligations as much as they need and the economy will come back? Or do you think we're seeing some kind of grand change to money here, especially as we have Bitcoin now?
Well, that's the thing. I don't want to make any grand predictions on, the future of the debt load of any country or whatever. The only thing I do know is people will start to notice that the paper money is being debased and that they need to invest in things that aren't falling in value relative to everything else. And so they're going to pick, Bitcoin or other cryptocurrencies. They're also going to pick gold, real estate, those types of assets. And I think it's no surprise that legendary investors like Paul Jones and Stan Druckenmiller are buying Bitcoin and explicitly referencing that it's like gold in the 1970s, because we had quite a bit of inflation in the US in the 1970s, and gold did very well because it's fixed quantity. There's a fixed number of ounces of gold. So I think that's how it plays out. Is that over time, and it's not like a light switch, where, one day the currencies that you and I have grown up with, exist, and the next day they don't exist. It's more of a, slow continuum where currencies like Bitcoin become, popular for people to store their wealth in it. And obviously you're seeing now even corporations like Tesla and MicroStrategy realizing that if they just keep cash, paper money on their balance sheet, they're going to get zero interest rates, and it's going to be depreciating relative to, their future expenses, right? In the future, they have to buy plants and metal and all kinds of inputs to their production. And if they have their cash sitting in a depreciating paper currency, it's a bad thing. So they'd rather have it sitting in something or being invested in something like Bitcoin that can appreciate.
Did that surprise you during this cycle? Did this expansion into companies like Tesla and Square and such put in their corporate treasuries into Bitcoin? Was this something you expected to happen, or was it come as a surprise?
It's been happening because Square did it 3 years ago. So there are some pretty forward-thinking companies. I've enjoyed watching it. MicroStrategy was $1 billion software company. Now there's $7 billion ETF, basically, Bitcoin ETF. And Morgan Stanley and Blackstone own over 30% of MicroStrategy stock. So it's been fun to watch. And obviously Elon Musk, super high profile marketing genius. So, buying 1.5 billion of Bitcoin is, it's both a good investment. Obviously, you and I agree Bitcoin's a good thing to have on your balance sheet, but it just helps them, stay cutting edge, and they accept Bitcoin to buy Tesla now. That's been the dream early. There's a company BitPay, Tony Filippi, long time ago, did do some kind of transaction where somebody bought a Tesla with a Bitcoin, because that's marrying kind of the two, most kind of meme-oriented things of the last 10 years.
Well, it looks good for MicroStrategy. Michael Saylor looks like a genius. He's massively expanded the value of the balance sheet for MicroStrategy, and even Tesla. It looks like a really great investment. Depending on how the cycle works, though, there could be companies who make similar bets, perhaps towards the end of the year, and they end up sitting on that Bitcoin during a drawdown. Do you think that presents any kind of risks or for the companies for doing that and timing it wrong? Because look, we understand Bitcoin, but you and I are, we're in this for multi-years. We've been in for years. We've got time on our side because our investments are already ahead of themselves, and we've got that patience. But perhaps a company would put some money from their balance sheet into Bitcoin, and would they need it in 2 years and during a drawdown? Do you think that presents some risks to company with timing?
It certainly does. But most of these companies are putting a fraction of 1%, like Square did, or low single digits. And so if Bitcoin went down 50%, it's still a very small fraction of their balance sheet. So, although you and I are very bullish on Bitcoin, I would never suggest a company put all their assets into Bitcoin.
Feels like MicroStrategy have put nearly all of theirs on.
They're going for it.
There you go. So back on some of the Bitcoin stuff, there's a few things I do want to ask you about. We're starting to see this transition as well during this cycle, and I think this comes back to your kind of coming of age idea, whereas the banks previously, had been pretty hostile towards Bitcoin, and now we've seen a number of banks have shown interest in Bitcoin. We've got MasterCard and Apple Pay showing interest in Bitcoin as well. What do you think the transition is here? Why do you think this has happened?
Oh, legacy businesses always, are slow to want to adopt disruptive new technologies. It's happened with every new technology. So it's not surprising that they didn't rush in, but cryptocurrency, blockchain is definitely very disruptive, definitely here to stay. You have central banks building on them now, so it's obviously very legitimate. It's going to be here forever. So they have to address it at some point, and they're always just doing the trade-off between any kind of brand reputational risk or cannibalizing their current businesses versus trying to stay, offering the products their clients want. And 5 or 6 years ago, not that many people cared about Bitcoin, so it was very easy for a legacy finance firm to ignore it. And 10 years from now, I think everyone with a smartphone is going to be using cryptocurrency. So we're in this kind of middle period where companies, can kind of choose whether to get engaged. And you're seeing that, a good example is Visa is now using USDC and Circle to move money around. That's really, really a cool use case for blockchain.
Has your phone been off the hook for the last 6 months? Are you seeing a lot of people you've maybe tried to persuade previously or talked to them about Bitcoin? Maybe not so interested now, but not interested previously, but now they're like, "Come on, Dan, what's the deal here?"
Oh yeah, no, it's funny. Basically every single person I've ever met wants to talk about Bitcoin, which is great. And big high profile things like Tesla buying Bitcoin and Coinbase going public, it just kind of forces people to address it. And that's what I've seen in my own life. Actually, I learned about Bitcoin in 2011 from my brother, and I read the white paper, and I'm some libertarian thoughts in my head. So I'm like, oh, that'd be great if it happened, but I didn't actually do anything. And it took 18 months to get around to actually focusing on it, reading about it, and then as soon as I spent a few weeks reading about it, I was like, oh, wow, this is going to be big. And I think that's really the path that all of us go through is that, I guess there's 100 million people using Bitcoin right now, which, you and I are excited about because that's a lot more than there was. But, 100 million people play Candy Crush, right? Like it's not that big a number, So the more, high profile things that happen, that, the more people have to read about it. And I've found the, kind of the rate of adoption is, in the 90% range. Like when a smart person actually spends a couple weeks and reads a lot about it, they almost always end up buying some, and then a couple years later they are buying lots, and they're really excited about the project.
Yeah, are the questions changing, or are people?
Yeah, questions change. That's what's really fun. Is in the early days, it was all like, what about the Silk Road? And there's no custodians, and government's going to ban it, and we already have the dollar. Why do we need another currency? So there was so much of that, and thank God all that's gone. And even the custodian question is really solved. And that was it's a very legitimate question if you're an institution and you want to invest in the crypto space. 4 or 5 years ago, there really wasn't a great answer to, well, who's the custodian? So it's nice to have all those questions put away. The ones that you still get are, but what about regulatory uncertainty, volatility? Still always a question. And then some people really do kind of have a problem with, well, we already have a currency. Why do we need another currency? And so we can riff on any of those if you want. But, the nice thing is a lot of the old questions are kind of put to bed, and, now we're dealing with some new questions.
Yeah, the regulatory uncertainty one is kind of interesting because for example, here in the UK, we've had our chancellor announce Britcoin. I don't know if you saw that, but that's essentially the CBDC they want to launch. And at the same time, we have very little regulatory support for Bitcoin. It's not been outlawed, but derivatives have been banned, and most of the banks, for one reason or other, the big banks are starting to block people from buying Bitcoin. I lost my bank account. I suspect it's a Bitcoin thing. I know HSBC, NatWest, and Lloyd's are all pretty hostile to Bitcoin. Not only just not allowing people to transfer money to exchanges, but I said to you before we started, they're not allowing people to even buy shares of some companies who are Bitcoin companies. So Coinbase, some people have been banned from buying shares in Coinbase. And that I find like really unusual, because I don't agree with it, but I understand the point with regards to buying cryptocurrencies, because in their head, they've been forced by the government to become essentially law enforcement for some of these things. So they don't want the headache. But I don't understand blocking an individual, a private individual, wanting to buy shares in a private company. It doesn't make any sense to me.
Crypto profiling. Yeah, so some entities just have a much higher standard against crypto than they do other things. There's obviously risk in all types of securities and assets and cash out there. So yeah, you do see some of that. And so it's declining over time. Obviously, 4 or 5 years ago, it was much harsher than it is today. So, commerce will probably smooth all that out. More and more customers will demand it. Banks and others will have to offer that service to their clients.
Well, it seems we're in a different regulatory position here in the UK than the US. What is your answer then to people with regards to their regulatory concerns?
Well, generally across the globe, most countries are neutral on Bitcoin. And like you said, the UK doesn't really do anything to help Bitcoin, but generally isn't threatening it. And so that's what I've seen in most of the countries that I've worked with, is that the governments are essentially neutral. There's a few very progressive governments, like Luxembourg, that are trying to make their country better for blockchain. And then there's a couple countries that have capital controls and are trying to keep their citizens from accessing the global markets that are hostile. But most countries are neutral. And in the United States, actually, the agencies have ruled very early on Bitcoin and very favorably. In 2013, the IRS ruled that Bitcoin was property, so you get long-term capital gains tax treatment if you hold it for a year. And the CFTC has always been very progressive. One of the commissioners came out to my house in 2013 for a conference I had with a bunch of the people in the Bitcoin community, and they started doing futures in 2017. You've had the OCC allows all nationally chartered banks in the United States to custody crypto. So most of the agencies in the U.S. have ruled, very favorably. And again, they're not going out of their way to help Bitcoin, but they're certainly not trying to hinder it.
Do you think that could change though? Is there any part of you that thinks, well, Bitcoin's still not a threat at $1 trillion, but perhaps at 5 trillion, we don't know how much gold the government holds, because it's kind of it's a bit unknown. They've never had an audit of the gold, but perhaps if we saw that transitionary period where perhaps people started moving into Bitcoin out from gold and the gold price was dropping, that's actually a threat to the gold reserves of the US government.
Yeah, so the U.S. government does hold 11 million worker years' wages in gold in a stone pyramid in Kentucky, which is very funny. That it's very much like the Egyptian pharaohs, that we pile a bunch of gold under a stone pyramid still. That I can't imagine anyone in the government really is actively thinking that's a great idea. I mean, obviously, we bought all that gold a long time ago. And the Treasury Secretary and my former colleague, Steve Mnuchin, did go out to see the gold at Fort Knox. So it does exist. So I don't know that any government really thinks it's a great idea no government's buying any more gold, right? Like that's definitely not a new idea. And then the idea about whether, bureaucrats want Bitcoin or cryptocurrency, probably most of them don't. They don't want something new to deal with, some new hassle. But the toothpaste is out of the tube. You can't put it back in. And China is building their own national blockchain. And that is an issue. The rest of the world can't sit there and just hope blockchain goes away, because it's not going away. And at our last investor summit in 2019, the prior one to the one we had a couple weeks ago, the chairman of the CFTC did a speech on China's announcement being America's Sputnik moment in finance. And I think that's a great analog. And for you younger viewers, Sputnik is the Russian space satellite launcher, the first launch into space. And the West realized we were way behind on the space race and got engaged. And that's basically what's happening here. The United States is 6 years behind the Chinese in building a central bank digital currency. And it has, very big geopolitical impacts that the U.S. exerts a great deal of control with its sanctions regime. And if there is a payment mechanism that's outside that, obviously power will start moving that direction. So I think governments are very engaged, and I think there's very little chance that most governments, obviously there's going to be an occasional government that has some kind of nationalistic policy that's trying to restrict their citizens from transferring wealth. But most, free market democracies are, I think there's almost no chance they do anything negative about cryptocurrency.
What is your read on CBDCs? You're a fan? Do you hate them?
Oh, no, no.
They're a surveillance nightmare?
It's kind of like, it's hard to hate something that does exist and will exist, right? Like, it's not really a great way to go through life. So central bank digital currencies will exist, and they just do different use cases, right? They are obviously stable, and they're probably more trustworthy than some projects out there. But they're stable with respect to paper currency, right? And that's really the trick, is that paper currencies, devaluing at a rapid rate. So I remember early on, Russia announced they were going to do a bit ruble, and a lot of people were super excited about that. But like, it's going to depreciate at the same rate that the ruble depreciates, right? And the U.S. dollar coin is going to have some advantages. Like right now, it takes 3 hours to send money across Wall Street. Fedwire takes 3 hours, and if I want to send money to the UK, it takes a few days. So US dollar coin would be great. Within a few seconds, I can send dollars to the UK, or I can send dollars across Wall Street. But if they keep printing lots of paper dollars, the blockchain dollar is going to go down just as fast. So, I think it's going to hasten, kind of the world's adoption of blockchain technology if central banks launch their own version of digital currency. It's going to credentialize the space. It's going to get more people in the space. But and so my view is it's going to make the pie much bigger. And obviously they're going to get a slice, and then private projects like Facebook's blockchain are going to get a slice, and then Bitcoin's going to get its slice, and then ETH, Polkadot, whatever. But as you grow that pie to 3.5 billion people, even Bitcoin slice is going to get a lot bigger.
True, but do you not worry about CBDCs and the kind of the impact upon privacy? I mean, it's having the complete control of our money by the government, who can switch off our accounts, censor our accounts, take money from our accounts. Does that not worry you?
Oh, no, it does. And everyone's going to vote with their wallets, right? They're going to decide, do they want to use the Chinese central bank digital currency, or do they want to use U.S. central bank digital currency, or do they want to use Bitcoin or Zcash, right? Like, everyone's going to get to decide, where do they want to dial their privacy in.
Yeah. All right. Last thing I wanted to ask you about, because I want to get your read on this. Where are you at with regards to ETFs? I know you're pretty plugged into the financial system. Where are you at with regard to ETFs? Do you think we're getting closer?
Yeah. So when we launched the first crypto fund in the US, we looked at ETFs, we looked at all kinds of structures, and we picked launching it as a normal hedge fund, but with daily liquidity, because we thought it'd be a while until an ETF was approved. That was 8 years ago. So it's been a very long time. The previous chairman of the SEC was very negative about Bitcoin. And one of the two reasons for denying an ETF was that the supposed market manipulation. And I've traded on Wall Street for 35 years. I've seen some really strange things. Bitcoin is not manipulated in any way remotely similar to all these other markets. For the very fact that it's just so massive. Bitcoin trades $70 billion a day on hundreds of exchanges in dozens of countries. There is nothing big enough to manipulate that. There's no like Dr. Evil from James Bond that's big enough to throw $70 billion around and manipulate a market that is just so massive. And by contrast, a good example would be GameStop. Prior to the insanity, it was trading $70 million a day on one exchange in one country with, these so-called free trading apps able to turn their customers on or off, arbitrarily. Those are manipulatable, right? And those are allowed. And then also at our Investor Summit, which should be up on our website soon, we have a speech with our fireside chat I had with SEC Commissioner Hester Pierce, and she's been making the point, very well. Great. She was great. That there is a double standard. It is crypto profiling. That the SEC is holding Bitcoin to this incredibly high standard, which I don't even, when they say market manipulates, I literally don't know what they're talking about. The market is so liquid and so deep. And on the flip side, they've approved things like platinum and palladium, which when I was at Tiger Management, we used to be very active traders in that. And there's a couple huge Russian companies that, have exert a lot of influence, it would be the word I'd use, on the pricing of those metals. Bitcoin's way safer and way clearer. And then the last point I'd make is when you try and repress something, it doesn't work. People always find a way to do it. And so instead of buying an incredibly transparent and incredibly regulated ETF, people are buying like MicroStrategy and like, Long Island Bitcoin Company, whatever, all these crazy people are investing via really weird ways to get exposure to Bitcoin. And it just seems if we actually are trying to protect, the normal retail investors out there, let's have a very regulated Bitcoin ETF. It's just the safest way to let people get invested.
Yeah. All right, Dan. Well, listen, it's always good to talk to you. Always appreciate your time. I'm following your 115 target. Have you done any predictions for your end of year target?
Oh yeah, so that's fun. My prediction is Bitcoin will be 213% higher a year from now. I've been saying that for 8 years.
That's a year from now.
Yeah, that's its 10-year compound annual growth rate, and so it's
you just stick with that.
It's been doing it for 10 years. All the fundamentals seem fantastic. You've got Morgan Stanley and PayPal and all these people helping. Lots of wealthy people get invested. So that puts it at 200,000 a year from now. And I know it sounds crazy, but I think it's likely to happen.
Well, if it's at 200,000 a year from now, that'd be great. And we can get on and we can talk about it. Well, hopefully we can do the next one in person. Hopefully we'll be flying.
Oh, I would love to do that. It'd be great to do it in person.
All right. Well, listen, good to talk to you. Appreciate everything you're doing. I love my updates I get from Pantera. I've never joined one of the calls, but I think I might join one of the calls soon. But I appreciate all the updates I get through from the company. I was watching some of your videos this morning. Is it the CNN one where you got back on with the guy you've spoken to?
I love that one. That's one of my favorites of all time.
That guy.
He's one of the rarest animals on earth, a supposedly intelligent academic that's super negative on Bitcoin. So it's
but once they get there, who changes their mind? Like they never really change their mind. Once they put their stake in the ground, they kind of stick with it, and Bitcoin gets higher. And I think it's a psychological thing. I think it's too hard for them to turn around and say they were wrong. Very few change their mind.
Yeah, and pundits don't pay the negative carry of being short, right? Like you could say I hate Bitcoin when it's at a low price and it goes up. It doesn't cost you anything. But I'd love to find somebody who's actually short.
Yeah. Yeah. All right, Dan. Well, look, keep crushing it. Good to talk to you, and I'm sure I'll speak to you soon.
Great. Thanks so much for having me on.